Hello, everyone, and welcome to another episode of What the Chart Says. Happy New Year to you, and I wish you a prosperous 2021. On this episode, we will be reviewing the performances of the Nigerian Stock Exchange for the year 2020. The year ended 31st December last year, December 2020. Let's get the ball rolling quickly. Looking at the agenda, the markets, we look at the market summary for the year. Then we look at the sentiment, the market breadth. It can guide us to see whether we continue to buy or start selling, or we just stay aside. After that, we review the market sectors. Then we'll be looking at the or sharing the chart generally. Maybe towards after today, we'll be looking at individual stocks later on. But for now, we just look at the summary of what happened last year. Possibly we look at what can happen for the year 2021 based on technical analysis. All right, this is the market summary. The All-Share Index again 50%. 50% for 2021. The market opened with 26,000, almost 27,000, and closed at over 40,000. That's a whopping 13,000 index points. As a matter of fact, Bloomberg rated Nigerian Stock Exchange market as the best performing markets in the world. 3 sectors gained, while 2 lost. I'm monitoring 5 sectors only. So out of the 5, 3 sectors gained and 2 lost. Industrial led the gainers with almost 91%. This is followed by insurance, then banking sector 10%. Insurance 50, almost 51%, industrial sector 91%. Oil and gas led the losers with almost 14%, while the consumer goods also lost with 3.3%. In terms of the stocks that performed very well, Japan Gold over 200%, Yatel Africa that's almost 150%, and Boa Cement, all of them they made over 100%. Then after that we have MTN and Vitafoam. There are many that made a lot of gains. I think Dangote Cement also it's around 50, almost 60% as well. All right. Omatech, the losers, Omatech 60%, and Afromedia. We have a few of them that lost, but there are not many actually. Okay, that is just the summary looking at the individual stocks. We have many that made a lot of gains last year, 2020, while we have fewer ones that lost. The All-Share Index made over 50%. That's very good. Now, looking at the market sentiments, this is the All-Share Index for the 30 most capitalized stocks on the Nigeria Stock Exchange. So we can see this is the blue line here is the index NSE 30 index rising up. These are the sentiments, or what they call the market breadth. The first one, this line here, the yellow line, is the advanced decline line that's reflect the short-term market breadth. The green one reflects miscellaneous oscillator. It reflects the medium term, while the long term is the summation index. In terms of their interpretation, we can see as the market is rising and the short term is declining. It's now below zero. This is the zero line. This is the zero line and it's below zero. So it might be opportunity for people to be buying some stocks. And also in terms of the McLennan oscillator, medium term is also going down. It's declining but still above zero. That's positive. And also the long term is above zero and it's a bit flat. It's a bit flat. So what this one is telling us generally is that while the stock, the price, the index is rising in terms of the price, the market breadth is declining. We have so many stocks that are moving down, while only few is moving the market. So generally, the market breadth is not good. What we can see, the reason being that look at what happened in this is November, between November, this is the top of the November. This is the height. Looking at the medium time, look at the heights, and while the price is making higher highs, the market breadth is making lower high. The same thing on the higher time frame is making lower high. So two things can happen. It's either the price go down to meet to be in sync, to synchronize with the market breadth. That is by going down, then all of them will start going up again together. Or the market breadth starts showing some momentum to the upside. But generally, it's not looking badly. Long-term view is not looking badly. It might be an opportunity to buy into some of the declining stocks. But what I want to say in the market is both of them to be rising together. It's just what we saw here from July, what we saw from April. While the price is going up, the market breadth is also rising. So that is what we should be looking at. But for now, it might be opportunity to buy some declining stocks or just to stay aside until the two are moving together. In terms of the long term outlook is not looking bad. It's above zero and it's a bit flat, but it can continue declining. But I think it's not bad. We look at the charts later. This is the market bread. Market bread is telling us the market bread is not looking very good. Looking at the medium and the short term. And another way to look at it is might be opportunity to buy. We look at the chart to tell us more in details, but that's the market breadth interpretation. Okay, so what's the stocks, the sector saying? This is the sector line analysis. The market index, NSE index is the gray tick line here. Only one sector outperformed the markets. I think we can say uh, only one, but this other one is tracking it. I'll not say it's only one outperformed the market really, and that is industrial. This is the industrial. Industrial outperformed the market, followed by insurance. Insurance is tracking the market. The banking sector performed below the market. It's below this the gray line, so it's underperforming the market. Followed by consumer goods. Consumer goods also outperform and it's actually lost. It's below zero, so it's negative. And the last but not the least is that I'm tracking is the oil and gas, which is also negative, as we saw in this summary. So what we can deduce from this one, look at the beginning of the year, from January, you can see that industrial has been outperforming from the beginning of the year. So if we need to take that into consideration, it's right now outperforming. It's over 90% outperforming the market. So we might say probably this year, 2021, the performance will continue. So industrial sectors stocks might be a good one to key into very well in 2021. This is followed by insurance as well. Banking is not looking good. This two are making highs. You can see high. While look at the banking is making lower high from consumer goods, and also look at the oil and gas. Oil and gas is making high, even though it's bad, but it's making high. We look at the chart, but in terms of the interpretation from the beginning of the year, industry has been outperforming, doing very well. At the beginning of the year, this is banking. Banking also started very well, but ended poorly. Uh, Performed below the market. So we have oil and gas also below the markets at the beginning of the year, insurance below the market, and consumer goods below the market. Out of all of them, only insurance performed very well at the end. Banking also performed very well, but it's performed below the market. So this year, better to continue to focus on industrial sector stocks, insurance stocks, and banking stocks. Also, shouldn't overlook this one here that's making our highs, the oil and gas. Over the week in this year, we'll be looking at individual stocks in the market. But for now, it's just a summary of what happened last year. Okay, so watch list. I just listed some stocks here we should be looking for. Agriculture sector, pharmaceutical sector as well, or industry. Uh, Mostly, as I mentioned earlier, industrial sector, insurance, and banking sector should be on our watch list. Also, oil and gas. Okay, now let's walk straight into the chart and see what the chart says. Okay, this is our chart. Let's start with looking at the indexes. Um, All-share index. This is the all-share index. Yeah, so this is the monthly chart. Uh, we can see it's just bullish from it's been bullish since July. In fact, it had a break in June, but the bull have started since April, little pullback in June. Overall, it bottomed up in April and started going up. That was the time I was giving signal that it's time to start buying. This is caused by uh, the pandemic, the decline here. Heavy decline here is caused by pandemic, but before the pandemic, the all-share index has been declining since 2018, February 2018. Now, it's what we can see for the future for 2021. For 2021 now, this is the bottom of the all-share index, all Nigerian Stock Exchange all-share index. This is the bottom here, and it tested it a little bit in April last year before rising. Now, for this year, 2021, it's targeting this top. Let me put another line here. Market is targeting this top here. So if the market can violate or move above, if we can move above this line, let me stick in that line. It's a bit, let me thicken it here. That's better so that everybody can see it very well. Okay, so what I'm expecting because last month was very bullish, so I'm expecting the bull to continue at least to 44,500 level, or almost 45,000. So 45,000. If it can go above 45,000, then a pullback. That's when I'll be looking for to 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 start buying again into the market. If I sold the one I have, but for now, the market is not looking bad at all. So, or if it's pulled back around here, it's possible it pulls back at this level. So the next support level, it might decline up to this, where I put the highlight here, the bull highlight here. If it didn't get above the top here, you have two scenarios. Let me explain better. Two scenario may unfold later on. The first one, which is what I think might happen, is for market to get to this level and then pull back to at least 38,000, or move back to this level here where we have the highlights. That is first scenario. Another scenario, let me change the color. Another scenario might be, let me give it blue. Yeah. Another scenario we might have might be markets continue to go up from here and violate the top here, move above it, then retest the top again. So that's an opportunity to buy, and this also an opportunity to start buying. Any pullback is an opportunity to buy. And if you pull back to this level, that's an opportunity to buy, because definitely it's to go up. Now, this is the highest that we have in the on the for the index before the global crisis started in 2008. So if this price is violated, it moves up and pull back again. So the market will be targeting to go to this level again at 65,000, to go to 65,000. That would be very, very good for the market to climb above this level. But if you find it difficult to climb above it, then it might be ranging around here. Okay, that is the all share index. Let's look at um, the sectors. This is insurance. Let's start with the one that, oh, okay, the industrial is not here. Industrial is not there. Let me go to another platform. We have insurance, industrial. The data here is few, is a bit few, so that's why I prefer the other platform. Industrial, this is the industrial sector. Industrial sector, yeah, this is what I'm saying. It started from 2014. So looking at the industrial, it's not looking badly. So it's targeting. This is beautiful. So it's targeting this top here at 2,400 level. It's targeting 2,400 level to rise up to that level, and if it rise above it, that will be better. Then the pullback will be time to key into the market, because it's going to test the highest that we have here. This one, it might not be the highest, because it's we have fewer data here actually. So, but it's targeting, if it moves above this level at 2,400, and it's coming to 2,800 level, which is good. It's been very bullish. So industrial is a stock to definitely key into. Keep it in your watch list. Now let's go to the next one. The next one, I go to this platform again. That's the insurance. Insurance also not looking badly at all. This monthly chart. So, ooh, it's made this high. It's broken the high here. It's broken it. So, wow. So it's broken this level as well. Wow. So what I'm expecting is either it continues to rally up and test the highest that we have on the chart, the monthly chart. It might not be the highest actually because 2008 we have fewer data. So any pullback here will be a good time to buy into insurance stocks. If we pull back to this level again, because we have a support, might get to this point. Is between. Let me bring out a rectangle. Oh, this is bear insurance. It's not looking badly. It's not looking badly at all. So it might pull back to this level, or at worst, get to this 160 level. So what I'm expecting now is to wait for a pullback. Let me move the chart a little bit to the middle. Yeah, good. So if there is any pullback, it's already violated a lot of tops. So it's targeting the high here now. It's targeting this high. It's targeting this high. It's targeting the high at about 260 there, about 253 to 60. However, we might have something like a pullback later on. We might have a pullback, and that will be a time to buy, or you can continue to go up and test the high here. That is insurance for you, insurance index. So those are the two top ones. Let's look at the banking sector. In terms of banking is not looking bad as well. It's struggling to break highs. So it tested that high and pulled back. You can see there's an opportunity to buy, and now it's going up again. So banking sector might be a good time to buy some stocks there. Some good stocks there at when it pull back again. Yeah, it's already pulled back. We don't know if we continue to go up, or it's going to test it again. If you test it again, if you see some stocks declining under the banking sector, uh, better buy. Okay, now what I'm looking at in the banking sector, it's to test the high here again, then possible pullback, or it continues to go up again. But if this price can pull back again to test this level, buy stocks under banking. Okay, so what do you have left? We have oil and gas. We have oil and gas. Oil and gas struggling to make highs. It's struggling to make new highs, but it's going up. Let's look. Let me analyze it very well. Let me analyze it. This is the line that shows that it's falling, where it's making lower lows, but it's moved outside that descending trend line. So it's moved below outside a breakout from the descending trend line. Okay, so it's not running up. It needs to. It makes a high here. It makes a high here. Let me get a horizontal line. So if the market can break this high and then pull back again, or struggling and continue to go down. The price can go down to this level. It's an opportunity to buy into oil and gas stocks, especially Seplats. I said especially Seplats, because the oil price, the global oil price, the Brent, WTI, the price is going up now. It's going up now. So any pullback in oil sector is also good to buy. Okay, so but it might struggle. It might struggle. It lagged. Oil and gas sector lagged in 2020. I see it lagging again in 2021. It has a lot of levels to overcome. This is the first one, followed by this level, followed by this level. Uh, anyway, but yes, we have some good stocks there actually. Okay, that is analysis for the sectors. Yeah. Okay. Let me see the seplat that I mentioned. Let me look at the monthly. Yeah, the monthly. Yeah, any price. If the market, if the price can test 400 again, it got rejected. Yeah, it got rejected. So any price below 400 to 350, from 350 to 400 is a good buy. It's a good deal for Seplat. Let me go to the high time frame. It just ranging. It's not making any good trend. It's not making a good trend. As I mentioned, this is a good buy. 350. Yeah, 350 to 400 will be a good buy on on Seplat. Um, oil and gas. But cement. Fantastic. Okay, Guaranteed Trust Bank. Yeah, yeah, we saw on the index banking sector declining. This one of the stocks there. So you can get to 30. Uh, there's a rejection here. In fact, it's a good buy. It's a good buy from now up to 30. It's a good buy. Guaranteed Trust Bank is a good buy. You see, it's from 30. Anything 30 is a good buy. Okay, maybe next week we'll be looking at individual stocks, but this is just a summary of what happened. Yeah, let's see some stocks on the in the industrial sector. This is the website of the Nigerian Stock Exchange anyway. So industrial. Okay, this is the industrial. So going down, we see bigger paints, better glass, cap, Curtis, Mayor, Portland Cement, Portland Page, so sorry. Dangote Cement, Boa Cement, Notori, and WAPCO. Yeah, let's see WAPCO. Let's see WAPCO. What's WAPCO doing? In terms of the monthly, this is where the opportunity is about 16 naira. About 16 naira. Let me see whether the market is yeah, anything from 16 to 19 naira is a good deal for WAPCO. 16 to 19 naira is a good deal for WAPCO. This one has gone up, Notori has gone up as well. Curtis, I think all these ones have gone up. We should be waiting for pullback here under the industrial. So anyway, that's the summary. That's what I want to share on this program today. Subsequent episode, we'll be looking at opportunity as the year goes by, especially towards the time companies will be releasing their yearly results. So we'll be looking at the individual stocks later on. If you have any comments, please drop it below and I'll take a look at them. Thank you and see you some other time. Bye.